is on holiday, public holiday. The Queen has a few holidays. I think it's the Queen's holiday or Labor Day or something. Anyway, wherever you are, whatever you're doing, I hope you're awesome and well. I'm working today. I'm up in Queensland, so we had our holiday not so long ago. So, yeah, there you go. Anyway, welcome. While the old Facebook Lives are warming up, we've got a few regulars on the way coming back, which is like James and a few others jumping on now. Well, while they're jumping on, warming up, saying hello. Jason Witten's my name. For those who don't know me, or you might be finding us for the first time, hey, good morning to you. I've been property investing 20 odd years across Australia and New Zealand, and coaching property investors across Australia and New Zealand since 2003. And each morning, have a little wealth coffee chat, as it says kind of right there. Over a coffee, we chat about things that we've learned or we've refined, over 20 plus years helping property investors across Australia and New Zealand. So I hope you're all well. A few people on right now, so that's good. Hey, Graham. Hey, Jeff. Joanna. Mark's there as well. Public holiday this morning. Probably people should still be in bed. Maybe you should be sleeping in, gang. Hopefully you are. So I had a question the other day. I can't remember who asked it. So whoever asked this question the other day, well done, good question. And it was about super, and how do we sort of pay off our super like quick? Like how does a property accelerate debt reduction, or how do you accelerate debt reduction with your super? And I thought I'd sort of take us through a little bit of a simple but powerful explanation this morning about what that is, because there's some pretty good benefits when it comes to owning property inside your super. Now, a little sort of disclaimer: I'm not a financial advisor. I don't want to be. There's some decent ones around. You've got to find one. Don't settle for an average one. But listen, this is not advice. This is talking about owning property in super. I own 2 properties in super. So, we'll talk about that. And we'll talk about the mechanisms, the finance and the debt reduction mechanisms with property in super, and how that can be paid down really quick and really fast. So let's jump over here to the good old iPad and have a bit of a look. So what are the sort of the main advantages with property inside of super, or anything inside of super? It's not to do with property, gang. This could be shares. There could be any asset that you invest in inside of super. Two excellent advantages when it comes to owning anything with your super is a reduction in capital gains tax in what's called the acquisition phase, or I think financial planners call it something different. But when you are when you are buying assets, when that super fund is still active, it is reduced tax. So capital gains tax is 10% compared to 25 or 30% or more, which would be your personal income tax level. So, gang, I don't want to dive into capital gains tax today, but capital gains tax is not really a tax; it's a calculation. So you get to not pay capital gains. You don't get to pay tax on 50% of the gain you've made on an asset if you own it in your own name, etc., etc. And then the rest of the money gets applied to your personal income, and you pay tax at your personal income rate. Yeah? Okay? So anyway, we won't dive into that one today. So, but I'm getting myself confused here. Capital gains tax reduction, you only pay a flat 10%. And income tax is paid at 15% as a flat rate compared to your personal income tax rate. And you can also get depreciation inside of your super. Well, I mean, at the end of the day, super is just a fancy trust structure. Gang, just so everyone knows, it's just a fancy trust, okay? It's just a trust that has some special rules. Actually, you should always draw a triangle for a trust, but that's it. A trust is just a super fund is just a trust with some special rules and some special treatment, and there's some things you've got to do with that, all right? So, but there's two excellent benefits when it comes to owning assets with your super that you must understand, because for you as an investor, this is a really smart thing to do. Now, understanding into the future, at the moment, you can have up to $1.7 million worth of assets with your super fund, and they will apply to these rules here. Actually, in retirement, these rules change. And does anyone know what the rules are, or the number is? What tax you would pay in retirement? Anyone know the number? I'll get around to talking about the debt reduction in a second. I'm quite sure a bunch of you guys would know the number. So the number is 0 and 0. Okay? 0, gang. Now that's bloody fantastic, all right? So understanding that there's a certain amount of assets, if we can, as we're going along with our strategy, we think about finding the best place for them to be the most efficient, the most built up while we're getting ourselves ready for retirement, or whatever you might call that. And remember, this is ×2 potentially. If you're in a partnership, you've got husband, wife, partner, whatever that is, then that can be ×2. So there you go. Anyway, so let's get to the conversation around when we're talking about owning something with your super, owning a property with that structure, okay? Now, a couple of little things we need to understand when it comes to the world of borrowing. So lending is really what I'm talking about today, the loans, and how you can lend and how you can pay them off. Really, at the end of the day, the loan-to-value ratios are a lot lower, okay? Plan on having to borrow at 60 or 70% loan-to-value ratio, which would mean, gang, you might need to put in 30 to 40% as a deposit, okay? All right, so now that seems like a lot of money, but at the end of the day, unless you've invested that money elsewhere in your super, then what else are you going to do with it, right? You might as well put it to work in a bit of real estate if you believe in that type of asset, okay? Number two, some of the challenges or some of the limitations for us if we want to own real estate with our super is that you have to have a minimum of 200. I think at the moment everyone's kind of saying, listen, it needs to be at least 250K with your super or more, okay? So anything under 250K, it's not worth it. The costs are too high, the risks are too high, etc., etc. Like I said at the start, I'm not a financial planner, and you've got to go and see a financial planner if you want to consider owning property in your super. I'm just talking about the lending and the benefits of owning it as a property investor. And like I said, I've got 2 of my super as well. So loan-to-value ratio is a little bit lower. You've got to put more cash in. But at the end of the day, that's not a bad thing, because let's say you had to put in, you bought a property for $500,000 and you put in 200K, that was your deposit, and your debt would only be 300K, okay? $300,000. Now, that's a pretty good loan-to-value ratio, pretty good debt-to-value ratio, and the rent would be $500 a week, okay? Now, already you can see how quick and how your property can be accelerated and paid off pretty quickly inside the super. Now, the positive cash flow on that would depend on the expenses of running the super and stuff like that. But, that could easily be positive cash flow anywhere from $8,000 to $10,000 a year, depending on, like I said, your expenses and those sorts of things. But that's not going to pay that property off that super fast, okay? So that'd pay it off in about 20, maybe 25 years. And there's nothing wrong with that, just letting the property pay itself off and accelerate along. But what happens, gang, yeah, James, the SMSF interest rates are higher. At the moment, I know there's a few around in the sort of the 4 to 5s, and sometimes they can be even 5 and above. So it actually confounds me that they can get away with charging such high interest rates for such a good loan, such an easy loan. I think it's a rort. I think the bank should be held accountable to that sort of stuff. But anyway, unfortunately, that's what happens. Hey, Roz, good to see you from the sunny coast, mate. Hope it's all nice and well up there. It's pretty nice and sunny down here on the GC. So we're talking about this, right? We're talking about, all right, well, just let the property pay itself off. That's perfectly fine. But what can happen? How can you accelerate? How can you accelerate the debt reduction? And this is what you can do. There is a contribution to your super at the moment. Everybody has to put in 9.5%. So some money goes in to your super already. Now you can choose to put some of that money, undo that. You can choose to have some of that money reduce this debt here, reduce this $300,000. So what we could do is we can work out what amount of money, extra payment, an extra $1,000, an extra $2,000, extra $3,000 per month going in between you and a partner, let's say, and we could smash that debt down in under 10 years, okay? So what my wife and I do, we maximize the amount, $25,000, we maximize from our side into our super on the way in. Remember, how much tax are we paying? Not 0 at this point, but only 15% compared to 25 or 30% we would normally pay. So it's an efficient use of our capital at that point. We're getting a bit of a tax deduction on the way in, and we then put the maximum we can into our debts, so we get to debt reduce our property. So if you paid an extra $4K off the debt, that property would be debt-free in 9 years. Okay? 9 years. So you think about that, gang. Hey, good morning, Jace. How are you, mate? Good to see you. Hope Vic is all good for you. So, gang, it's a simple conversation, but it's actually quite powerful. The money that you're contributing into your super, it's great. It's for later. I call it a plan B. It's like it protects you from you. You put money in there. If you want to buy a property, chat to your accountant. Probably not your accountant, but your financial planner about getting it set up. But if you want to buy a property or other assets in there, then you can for you as an investor, and it can accelerate debt reduction. And when that property is transferred at the appropriate time into income phase for you and your retirement, it can be, very tax effective, tax free. So hopefully that made sense this morning, gang. It was a bit of a simple conversation, but like I said, very powerful. Morning, my love. There's my love. How are you going? A bit of a simple conversation, but a very powerful one. Some of the challenges we have with super can be getting enough money in there, to be honest. It's a great place for some of your money to be. Depending on your age and the timing of your life will depend on, lots of other different factors. But there you go. I'm a big fan of debt reduction. I'm a big fan of using money that you have already to efficiently build and create your wealth for your future. And I'm a big fan of making sure it's efficient, getting the most out of every dollar you earn, because for most of us, we don't have lots and lots of spare cash just flying around. We're not rolling in dough. We're not swimming around in it like Richie Rich or Scrooge McDuck at the mansion. We've got to make the most of every cent we got. So there you go, as you go. So there you go, gang. Yep. Supposedly, well, there you go. Shay said it's going to be up. Super contributions up. Okay. I didn't know that, but it's probably because I don't read the news. I end up finding out when I need to find out, which is good. And James, thanks to you, buddy. So, gang, that's it. I'm done and dusted. Wealth Coffee Chat. Hopefully, wherever you are, if you're having a good Monday off, enjoy yourself. Have a great time. If you're not, if you're working, don't work too hard. Just work real smart and make sure you put your money to work in the short term so you don't have to work for money in the long term. There you go. That's my tips for you. Anyway, Wealth Coffee Chat done. There it is. Kind of there. For Monday, the 14th. You guys are awesome. Thanks for joining me, and have an awesome one wherever you are. All right, gang. That's it. Adios and bye-bye. Cheers, James.